Let's lighten it up now for some Top There Trade. Joining us for our trader game, Bill Flynn, a Fox Business News Network contributor, and Alan Knuckman, the chief market strategist at bullseyeoption.com. Here we go with round number one, macro market. So far, stocks have been sell the rumor and buy the fact, but where do we go from here?
Well, what happened last week was what we've seen over and over again. That's the way new lows have been made in the last decade. It had that sharp sell-off and a capitulation and a higher close on the week. But most importantly for me was the fact that the VIX didn't make new highs. So a lot of bullish divergence. The market that crashed was Russia. Russia lost 50%. Our stock market right now is about 10% off the all-time top.
I think you're seeing some safe haven buying in the U.S. market as compared to overseas markets because of the conflicts in Europe. And I think overall there are some very good values here right now. But I think you do want to rotate away from the more speculative names to good value names. Energy stocks is something Alan and I have been talking about for a long time. And I think they're going to continue to do very, very well. So get into those old traditional names. Some of the high flyers, your Netflix, your Apple, you're probably going to get some good buys on the pullback. But, you know, like I say, be patient. I think you'll get a good buy.
It was bad enough to buy. So the risk reward had kind of flipped where a lot of stocks that were down dramatically, 50% off their recent highs. You want to see it build on this. And for me, I'm looking for 4,500 in the S&P, which is kind of the pivot of that drop from the top. And we'll see if we can get some new legs and another push to the upside.
Round number two, oils well. Exxon, Chevron, British Petroleum, and Royal Dutch Shell had the highest profits in 7 years. Gas prices are also the highest in 7 years. What's the better buy? A tank of unleaded gasoline or one of the oil stocks?
Well, I'll tell you right now, a lot of those names that you mentioned have been doing business with Russia, and they're pulling back from Russia right now because of the invasion of Ukraine. So I think right now there's no doubt that what you're going to be paying at the gas pump is going to be substantially higher over the next couple of weeks. So I guess it depends on your risk control, right? But make no mistake about it, I think oil companies are buying breaks. I do think that some of these stocks are going to pull back after the tensions ease a little bit. But the long-term story for oil is here. You've got a commodity where we are undersupplied. Whenever we've seen that in history, oil companies have performed very well, not just for a couple of years, but for a decade. So I think these are good long-term buys. Look for the dividends. Get your ExxonMobils, your Chevrons. Now's the time to buy them.
Well, looking at the oil stocks, they had a great year last year and great 2022 so far as the leading sector, but they're still only up about 10% in the last 3 years. So they're the least performing sector if you go back over the last couple of years. So they still have a lot more upside. Where I see the upside is UNG. When I talk about gas, I mean natural gas. We've got a whole bunch of new customers now, and natural gas at $4.75 is still not at its high for the year. And it was at $6.50 in 2021, and it was at $15 in 2005. So I think natural gas can be unlocked here, and there could be a lot of potential in natural gas and natural gas stocks.
Round number three, rate debate. The yield on the 10-year dropped to the lowest level in 2022. What does that signal?
Well, looking at rates, we've seen a push down because there's been a demand for treasuries in times of instability. That typically happens. But we were at 2%, and that seemed to be a magic number for a lot of people on the 10-year note that a lot of mortgages are pegged off of. So we've had a dramatic drop from that level, a reversal so far. Let's see where it goes. But the question now is, we are in March, and that means we're going to get our rate hike. It's got a 97% chance of a hike here in March. But for me, I keep an eye on the end game. And the end game is that we're going to finish up here at 1.5% at the end of the year. So now we front-loaded all this. All the rate hikes are coming this year, and it looks only like one little hike next year. So then the cycle is done. We can move forward.
Then the question is that going to be enough to cool off inflation? And this is going to make the Fed's job a little bit more difficult. I mean, there's a possibility we could be talking about oil at $150 a barrel or $200 a barrel by the end of the year. Some people are calling for that. And that's going to make the Fed's job a little bit harder. So maybe this isn't just a fear play with keeping rates low. Maybe this is a situation where the market is saying to the Fed, yeah, we know there's inflation, but you could make things worse if you get too aggressive on raising interest rates because the cure might be worse than the disease. So I think it's a sign that they're going to have to be a little bit more measured because of the breaking developments coming out of Europe.
All right, here's your bonus round question for today. A lot of people are very concerned or complaining about high gasoline prices. So let's take a look at this. What was the highest recorded price of gasoline in the United States? Is it $15, $11, or $8?
I'm going to say $15.
I agree. It's $15. Somebody gouged prices and got somebody to pay.
Oh, guys, the answer was $8, recorded in Western Alaska in the summer of 2008. But great job anyway. Go to businessfirstam.com for where to see our show on TV.